Hello and welcome back to CryptoNovus, where newbies become masters. My name is Chris Brown and I am the host. Today I'm going to take a look at kind of why, Bitcoin has dipped a little bit in price as I've been watching today. And I think there's some good information here for newbie investors that they need to consider. As you take a look at Bitcoin price action on the 1 hour price chart, you can see that from yesterday, about 8 o'clock in the morning, Bitcoin came steadily down to about 4 o'clock in the morning and then rose just a little bit and then dropped as low as just under 35,000 from a high of about 40,000. So the question is, why exactly did that happen? And so what we can see here is that today about 2.1 billion in Bitcoin options expired today. And so what does that mean? Typically this happens, expiration dates on option contracts often bunch at the last day of the month. What this tends to do is it tends to cause prices to dip. And so what is exactly an option? A Bitcoin option are derivatives contract that provide buyers with the right, but not the obligation, to buy Bitcoin at a certain price in the future. In this particular case, the strike price was about $50,000. Last month, there's $3.6 billion in Bitcoin options. They expired because the strike price was 54,000. So, with that being said, and those options were not executed, therefore the price tends to dip. It says here, the monthly event often coincides with low Bitcoin pricing, and today's crash supports the theories that option contracts depress prices. But all is not lost. You got Nathan Cox here, who is the Chief Investment Officer at Digital Asset Funds 2 Prime. I talked a little bit and kind of ended this little article on a positive note that says while traders are a little still on the edge, all is not lost, and that there's some anticipation that pricing will come back towards the tail end of the year. But what has happened during this dip? I think we need to take a look and see that in this dip, a lot more people have bought because there is an accumulation that has been occurring. And in this article that came out from Glassnode, well, this is in CoinDesk, but Glassnode Matrix basically on Wednesday articulated that the count of accumulation addresses actually has climbed to a record high for 7 consecutive days in a row, counting Monday, to just under 550,000. This is an increase of 16,000 since May 8, in spite of the fact that Bitcoin had dropped from 58,000 to about 30,000. So the question is, who's doing the buying and who's doing the selling? So let's take a quick look at that. So if you jump to Glassnode and you go to their insights page here, you're going to find this article that actually does, this is a really nice extensive article on the sell-off of May and kind of why, why it happened and just kind of the results. So it took a really close look. I mean, the thing that really jumps out at me here that's really important to see is that Bitcoin fell about $11,000, a little over $11,000 for a total of about 47.3%. And you take a look at this chart here, and you can see more closely what happened. So since basically back in December, they've kind of, Glassnode has kind of broken up this run into 4 different phases. They've got this, what they call the super cycle bull run, that basically takes us to under 20,000 and peaks us up here at just under 60,000. Then and that goes all the way to the middle of March. And then from the middle of March to the middle of April, basically another month, they got this consolidation phase, which takes us up to about 64,000. Then the next month, from basically the middle of April to the middle of May, they've got what they call a correction, where it dipped down to about 45,000, popped back up to just under 60,000. But then the last phase was this capitulation phase, where it dropped this a little over 11,000 from basically just under 60 to just over 31,000. Pretty significant drop. So here they really kind of describe what they're going to talk about. For the most part, this article talks about They investigate the metrics that are involved to describe the market structure leading to the sell-off, as well as an assessment of the bull and bear cases moving forward. In this article, what they're going to do is they're going to talk about institutional demand. They're going to talk about flow of coins on and off exchanges and the value of that, as well as comparisons to market cycles and sell-offs and holder behavior to other bull run phases in the past year. So the one thing to note that there has been a change in institutional demand. It was really responsible for the run from under 20 to up to 64,000, but it did have a cooling off period of time during that consolidation phase. And you can kind of see that here to where, premiums kind of leveled off and then trading discounting started to decline slightly. You can see in this chart here from, grayscale in terms of selling premiums and trading at a discount, the lowest being at a negative 21.3%. And they've kind of had a decline, if you will, for about three months or so. This is a significant chart because it really shows that for 30 days, for the past 30 days, about 175,000 BTC have become liquidated off of exchanges. So the question you have to ask yourself is who's buying, who's selling first, and then who is buying what is being sold. So here's kind of the article summary real quick in terms of what does this information need for the bears and for the bulls. For the bears, institutional demand clearly has softened from February. The balance on exchanges has increased meaningfully, resulting in larger volumes of coins and overhead supply. I like the last bullet point. A large volume of short-term holders remain underwater. So those that bought just recently, they are not seeing profits right now, and they're going to need to hold in order to do so. For the bulls, the institutional product from Grayscale and the proposed ETFs are showing signs of a little bit of recovery, even though prices are down. Exchange balances are beginning to increase. And the last bullet point again, the majority of the selling appears to have been short-term holders, where long-term holders appear to have bought the dip with increased conviction. And you can kind of go through all the details of the article, but I think this is really good just to kind of wake us up a little bit. And again, to repeat the things that I've said, there's a lot of manipulation that's going on. And for you guys that are just beginning to invest, don't get spooked by all of this price action and this volatility. The volatility is a part of the cryptocurrency market, and you have to get used to it if you want to stay in and play the game. Hopefully this information was helpful to you. This is Chris Brown with CryptoNovus, where newbies become masters, and I will see you guys in the next video.